Welcome back, y'all. This your boy Jay back in the building. YouTube family, how y'all doing today? So, we went over everything. Let me know if y'all looked over everything, if y'all learned anything. If y'all did any of the actions that was in that video, y'all definitely put yourself in a great position. And now that we are in position, now we can start actually investing our money. So the first thing first, we're gonna start out with a small amount. Your first $500 to $100. Real simple. You don't want to overcomplicate it. Like people say it's hard, but it's not hard. We only make it complicated. It's simple right in front of us. All right, y'all. So we talking about how to invest our first $100. I just put a little $18. I'm gonna put $18 in, but I'm just coming back to talk to y'all about the Roth IRA. Most of y'all that got jobs have a 401k, stuff like that. But a Roth IRA is of course, retirement individual account. Yes, my bad. Retirement individual account. So it's mainly for you to do on your own and put your own money into. I believe you can roll your 401k over into a Roth IRA. But for those that are entrepreneurs, for sure, and you don't have no 401ks and you don't got no stuff with your job or nothing like that because you're an entrepreneur, Roth IRA is the right thing for you. And like I said, that's the best way to go because traditional IRA, they're gonna tax when you pull that 50,000 or $1 million out. Versus Roth IRA, you pull that 1 million out, they cannot tax it. They already taxed on the front end. They cannot take money twice. So definitely y'all stick with that Roth IRA, but I prefer going into the Roth IRA first. Number one reason is I think they call it opportunity cost. So once those years pass you, because you can only invest like 7,500 a year, and once that year is gone, you can no longer invest for that year. They let you invest 1 year previous. So like it's 26, they'll give you some days, certain amount of time to get the rest of 2025 out the way. But once it's gone, and you're gonna that's basically a missed opportunity. So definitely try to max out that Roth IRA. So over time, if you want to look more into the future, 6 years old is when I believe you could pull that definitely out. But like I said, I'm gonna make a totally different video for the Roth IRA. So let's keep this video going, boy. Okay, and like I said, since we now in position, I don't want y'all to not invest because people don't invest because they don't have the money. Because people spend money on whatever they choose, whatever they feel like doing. And a lot of people buy emotionally. So I want y'all to get that same feeling when it comes to the stock market and investing in your future, okay? So we're gonna go down step by step, basically, how you invest in the stock market. Did y'all see the video of how to open your brokerage account? All you gotta go to is go to the site, which I recommended Charles Schwab, Vanguard, of course Fidelity, things like that. But me, I'm currently is with Charles Schwab, right? So basically yesterday, what I did, I invested $50 into the SWPPX, which is Charles Schwab Standard and Poor's Index Fund, which followed the S&P 500. Like I said, that index fund, y'all, it's on a up and up. It's gonna dip. Donald Trump gonna say something. It's gonna dip, but it's constantly gonna pick itself back up because they have the top 500 companies in the United States of America. So you cannot really fail with that. And the fact that they do replace bad operating companies and replace them with better ones, you will never see it completely tank down. Like I said, unless the world is over, and at that point, there's nothing we could do about it because we can't take the money with us either way it go. All right, y'all. So this is the exact steps right now we about to do. About to go to the Charles Schwab app. I already got the SWPPX right at the bottom. You see 36 shares so far. So all I got to do is click on it. You all could just definitely search it up, SWPPX. And this is why I like Charles Schwab, because it lets you get fractional shares. So I just put $18 in to get one share, right? So I could just use 18, but you see at the bottom underneath, estimated shares is going to be 1.0058. So if you just put $20 in, you will buy fractional shares. Just so y'all know that. And you can always confirm your order right here. Look over everything. Make sure everything looking good before you place that order. Everything, check it. Make sure it's reinvested. And once you click that, boom, you might have to set up your reinvested. Definitely want to make sure your stuff reinvested. You got to set that up probably in your brokerage account. We probably could definitely talk about that as well, how you set up reinvested. But once you place that order, you can always look back. It'll let you know, okay, boom, order received. Especially if it's a market order, order received. And you can go into your order status and see SWPPX. The order is still open. The reason why the order is still open because it's a mutual fund versus a ETF. And why SWPPX is an ETF and not considered, well, why SWPPX is a mutual fund and not an ETF? Because it operates totally different. Mutual fund, it only get priced at the end. So whatever the market closes at, that's what you bought those shares at. You can put your order in, but it ain't gonna really be filled until the end of the day. Versus the ETF. ETF you could buy it anytime, but you have to pay that full price unless you're with Vanguard or something like that. Because they have VOO that is their ETF, but you have to pay Well, that's like $600 probably at right now. But fractional shares, you can buy fractional shares of VOO as well. Depends on who y'all go with, and you could put that $20 in, but it should go through right then and there because it's not a mutual fund. Mutual fund go through at the end of the day. All right, and I got this pulled up for y'all through ChatGPT just so y'all get a clear perspective on why it's mutual fund. Like I said, it's only priced once a day after the market closes, right? You buy, sell at the net asset value. Boom. No matter what time you place the order, the same end of the day price. That's all it's gonna go by at the end of the day. Like I said, I mentioned VOO ETF. It trades all day like a stock. So you could buy, you could trade it, you could do option trades on it, you could do all that. Which we're gonna get more into those things sooner or later, but price move every second, right? It's gonna constantly be moving. You can buy at 10 a.m. and sell at 10:05. So you can buy it and sell it quick. But if you sell SWPPX, of course, it ain't gonna sell till the end of the day. It ain't gonna just sell right then and there. So I definitely hope that takes a lot of the guessing work out of it. And that's all you have to do. SWPPX. If you do not know what to invest in, SWPPX, I'm about to show y'all a few right now. All right, y'all. So now I want to show y'all the different comparison between the ETFs. This VOO, SPY over here, right? Like I said, they carry the same stuff. This is the holdings. NVIDIA, which they call the Magnificent Seven, most likely they're going to be the top ones, which most of the allocation goes towards. NVIDIA, Apple, Microsoft, Amazon, Google. I don't think AVGO in the Magnificent Seven, but I know for sure Meta, Google. You see all of them carry the same thing. Tesla and Berkshire Hathaway Class B, JP Morgan Chase. So this one the only one it don't got JP Morgan Chase. Now mind you, it probably have it. Let's see. It's in there, but it's just not in the same row. As you seen, everything else was pretty much in the same row. But it's pretty much the same companies. It's like a direct match. Might be a little bit of things that's off. And now let's go to, no, not that one. Let's go, how do I find, right here, SWPPX. Like I said, SWPPX is not a index fund. It's more of a mutual fund. But look at the, see it tracks S&P 500 index, right? So look at the top 10 holdings. NVIDIA, Apple, Microsoft, Amazon, Google, AVGO. It's the same thing, but like I said, I showed y'all the difference between the mutual fund and the ETF. So hopefully y'all understand like the difference between the mutual fund and the ETF. But the reason why I'm with Charles Schwab is considered the mutual fund. But since I was already with them, I just started investing into the S&P 500 versus if I would have automatically started with Vanguard, you could start putting your money in the S&P 500, which is VOO or VTI with them. So y'all definitely know if this helped y'all, want to make it short and simple. But I'm going to go back and add the Roth IRA on the front end. Just to let y'all know, I would definitely recommend investing into the Roth IRA first over just putting in a regular brokerage account because we're going to make a whole nother video on that though. But the whole purpose is you protect it from taxes in the Roth IRA versus in a regular ETF in a brokerage account, it's going to get taxed the minute you pull your money out. But Roth IRA, you can't tax that when you pull your money out. It's taxed on the front end and not the back end. So we made this one real short and sweet for y'all. Y'all let me know if y'all got something from this video. If y'all did, definitely comment it down below. Have any questions, anything like that, I definitely want to get y'all on the right path. And y'all see, I'm definitely trying to stay on the up and up on the right path. So I've been putting the money into the SWPPX. I'm going to slowly put it in. I did it before, but I made the mistake of selling it. And now I'm working my way to build it back up. And that's one thing y'all don't want to do. You don't really want to sell too often, especially S&P 500. Let the money sit. It's going to ride up. Even if it tank down, it's going to ride back up. But the whole purpose of that, why you don't want to sell, because the compound interest and you got to pay taxes on it. You don't want to have to pay the taxes. Let that ride its way out and ride its way up, right? And that's also why in the beginning we definitely talked about emergency funds and stuff like that. Put that money to the side so you don't have to worry about going into your brokerage account using that money. That's what I don't want y'all to do. I don't want y'all to need that money and now you're trying to invest it and then you're like, oh, I got to pull this back out, because you're only making it hard on yourself. Once you pull it out, oh, any gains, they're going to tax it. I mean, you're going to get more and more taxes. So best is to let it sit in there, let it ride its way out, because if you keep getting taxed, it don't make sense for you to be investing if you're going to take it out. So put that money to the side that you need. That way, when you need money, you can pull from the emergency fund. But you never look into the stock market. I've been having money in there for a while. I never had to ever go and touch it. So I'm grateful for that. Thank God for that. But I'm still working on my emergency fund. So I definitely need to build up that 3 to 6 months now. So y'all let me know if y'all like the video. Don't want to keep going. Make it simple so y'all can do the research and see what fund that y'all like, what ETF that y'all may like. And I showed y'all the websites, ETF.com. You can go on Yahoo Finance, all that. Look through it, see which one you want to stick with, which one you want to open your brokerage account with. Stick with it and just keep going. Month to month, week to week. Right now, I'm doing $50 a week into SWPPX. So it goes straight to my investing account and not just, okay, go buy SWPPX. Like yesterday, I said I bought $50 and I just wanted to show y'all how to buy more. So I bought one more share today just to show you all. But y'all have a great day. Blessings. And I appreciate everybody watching the video. It definitely helps a lot. And the more y'all watch it, let me know that people are learning. That's why I want y'all to comment, like the video, and let me know that this is helping. But I will still continue to make these videos. So thank y'all for being on the other end watching these videos. And it's going to help me stay 10 toes. Like I said, the goal is to get fully invested. So y'all definitely keep me accountable to that. I'm keeping my account. That's why I want to make these videos, to look back and keep myself accountable. Like, have I been really doing what I need to do? And I definitely want to get fully invested. So let's give ourselves a round of applause. And I appreciate y'all. Let's be proud of our small steps. Even that one step of buying the SWPPX $17. I put 18 in, so I got more than one share. But small things eventually piles up, turn into big things. But if we don't get started, it will never see no growth, no nothing from it, because we never took action. So let's start taking action, y'all. I'm here with y'all. So if y'all have any questions, let me know. And it's your boy Jay, and we out. Peace out.